Hello, this is Saurabh from Tax Accountant, and today I'd like to cover a video, and this is a video on land tax in New Zealand. Now we all know we do not have land tax as such in New Zealand, but could there be a land tax in New Zealand? So this video is being recorded in June 2025. As of now, there is no land tax in New Zealand, and current ruling party has not decided to implement any land tax. However, recently another party, which is a Green Party, has mentioned within their website and budget 2025 saying that there should be a wealth tax in New Zealand. And I really want to dig into it, what is land tax and how this is compared to other parts of the world, mainly Australia, and see could this be implementation of land tax in New Zealand or not in recent times. Let's dig into it and see. This is my interpretation and my views and what I found out. Now we need to understand land tax versus council rates. We do not have land tax as such, but we have tax in other parts and other form of the shape in New Zealand, such as one is the council rates, and recently the rates have gone up significantly. So has been increases 6%, 8%, 10%. So have been recent increases since last 3 to 4 years, and this is mainly to fund services like roads, parks, pool, rubbish collection and things. And the value of the land is based on the capital value, which is the land value plus the improvement value, and this is funded primarily through local council rates. So each of us will get a bill in the mail or through email that this is your rates for the year, and you cannot avoid it, you have to pay. And the way it's been structured, it's in very low administration cost to the government, because this is simply sent the letter and this is collected. No deductions are allowed as such, and the value of the land is not determined by you, it's determined by them as well, and the ratio and the way it's been charged is determined by them. So you have no say on that, you will have to pay. As opposed to income tax bill or GST, there is some sort of calculations done, but in this there is no calculation done. Bill comes to you and you got to pay. And we do have rental tax in New Zealand. So rental income is taxed through your normal way of taxing. So rental income is taxable. The deductions that allowed are which is directly related to deriving that rental income, such as any rates, which is the council rates, insurance, repairs, maintenance and things like that that you have paid. No general land tax in New Zealand as of now. We also do not have any formal capital gain tax. However, there is a bright line tax which is kind of a capital gain. So if you hold the asset for number of years, and if it's below the threshold of that number of years, it's been changed multiple times throughout the years that how many years you can hold, but general rule of thumb is you have to hold for a long term. So if you're holding an asset for a long term, it will lead to no gain, no tax on the gain. However, if this has been disposed within a short time frame, then there will be some income tax applicable on that sale proceed. Main home is exempt. So generally, if you are occupying your family home, this is exempt from these sort of calculations. Now, land development and speculation. Land development, it's always viewed through by the tax authorities that land development and speculation will be taxable. So it's applied to dealers, developers and builders. So gains taxable even for long-term holding, and that's according to section CB6 and CB15 of Income Tax Act 2007. Now wealth tax debate. There has been a lot of time, there's been a debate that there should be wealth tax in New Zealand. 2009 tax working group recommended land tax, so that was one of their recommendation, and there has been ongoing political debate from other minor parties as well that this to be implemented. So right now this is not an agenda of the government and they are not looking into implementing it, but this could be an emerging policy in the future. Now we need to see how land tax applied in Australia, right? So this is an Australian website. It's a revenue.newsouthwales.govt.au. According to them, there is a land tax threshold. So this is a New South Wales, and it clearly says that on land value of 1075, so $1,075,000, it's exempt, but over and above this is taxed at a 1.6%. Now look at that. This is how Australia tax it. So they look at annual tax on unimproved land value. This is applied in addition to local council rates, and this is varies by state. But the idea is there is land tax in Australia in some form or a shape. If you have a property in New South Wales and you have property value is $2 million, multiple property portfolio basis, if it's 2 million, so first $1,075,000 will be exempt, but the another $925,000 will be taxed at 1.6%. So you're talking about roughly $15,000 to $16,000 tax bill will come to you. Of course, this will be a tax deductible expense for the person who's paying it, but this will be an added expense for the land owner. Now, New South Wales do have this, as I explained, threshold is $1,075,000 and 1.6 above the threshold and 2% above 6.5. So if you are wealthy, like highly wealthy, if your ownership is over $6.5 million, then you will be paying 2% over 6.5 million, but your principal residence is exempt. Now Victoria, this is how it works in Victoria. Threshold is much lower, is only $50,000, and rates varies between 0.375% to 2.55%, and annual fixed charges and vacant land tax also applies. So Victoria do have a vacant land tax on top of that. Now Queensland threshold is $600,000, rates varies between 1% to 2.75%. They have a foreign owner surcharge and aggregation rules. So each state have a different things going on there. So as you can see, New Zealand versus Australia, we do not have a general land tax, but we do have other provisions such as bright line tax and rental income tax. And Australia do have annual land tax imposed by states separate from council rates. Now this is a Green Party. This is their proposal. I'll show you a screenshot. This is the proposal. Chapter 12, fair taxes to fund our future. They have clearly mentioned here, tax individuals net wealth over 2 million at a rate of 2.5%. So they want to tax 2.5% on someone owning over $2 million. So this is the Green Party proposal, 2.5% tax on net worth over $2 million. So there is no mention of family home exemption, but I'm hoping that that's what they mean, that first $2 million which is exempt, they're hoping someone's family home will be exempt through this purpose. The main policy is to increase more government revenue. Now this is a screenshot from the tax working group recommendations, on which they have mentioned what they're trying to say, that look, there are pros and cons of implementing land tax. If from the compliance purposes, it's very easy to implement, as council already know how much is the value of the land and who are the owners. They will simply do the calculations and send a bill in your mail. You got nothing, you can't escape, you will end up paying that. However, but they're also saying is it's not efficient and it doesn't create a fairness, because the person who will pay the bill will get the notice today. So it could be different people. So someone who owns land but they newly acquired that land only 2-3 years ago, and someone who acquired maybe 30-40 years ago. So the person who acquired before have an added advantage, because they are paying tax on something they acquired at a very low value. But someone who's acquired just now in last, let's say 10 years, they would have paid good money for that and they will end up paying the bill. So end of the day, the value will fall significantly. The land value will fall significantly. Could be 20 to 25% will fall immediately, like within 6 months of that being introduced. And if you are the homeowner, whether or not you are within the threshold or above the threshold, so each property owner will be somehow impacted. Let's say a property is purchased for $1 million from a first home buyer, where 800,000 is their mortgage, so 200,000 is their equity, 20% is their equity. All of a sudden, if the property of 1 million becomes $750,000, so the people, they're not gonna like it. So $750,000 is the value of the property, whereas the mortgage is 800,000. So you got a negative equity in your house, and it will take years for that to build up. Could be 10 to 20 years for that to build up to be where it was before the introduction of the wealth tax. Basically what they are saying, the future value of that property will be discounted back to present value today. So it could be a big shock to the economy as such. That's what they're saying, the likely immediate drop in land values. Tax affect both high equity and highly leveraged owners equally. As you can, I just explained that if you have high equity, which means you purchased that property long ago, which means equity is very high, or you're highly leveraged, you got a loans against those properties and things, but you will still be taxed because there is no provision of asking someone to offset the lending or not. If that's introduced, it will be highly complex system again. And would that be a fairness? So fairness, what I mean is we're taxing the landowner, but if someone do not have equity in land and they have invested that money into managed funds or financial markets and things like that, we're not taxing them, we're only taxing the landowners. So wealth could be in two forms. It could be in land or it could be in other form. So how are we going to implement that being taxed on someone who has managed funds? So if I'm the investor and I got $6 million invested into managed funds, if first 2 million is exempt per Green Party policy, the balance 4 million, are they talking about that to be taxed as well? If that being the case, the implementation of that could be very hard, impossible nearly, because people can simply shift the assets into other forms or shape. Could be crypto, could be gold. How that's going to be implemented? Land is the easy target because this is easily visible, and administration is very easy because council already has the record. It can be implemented straight away. But would that be a fair system of taxing someone who is fair and visible? So that's something the government have to really balance. Now, administration, as I mentioned, relatively easy to implement. If there is a land tax in New Zealand, it will be very simple. Council already hold land value and ownership data, so it won't be very hard for them to do the administration. However, there could be market and financial risk as such. Property value will drop, and this is a definite. It's not that it's likely to happen. This will happen. The property prices will fall, and this will lead to negative equity for almost everyone. Could this establish the financial system, and could household and banks heavily exposed to property sector? As we know that New Zealand household and banks are heavily exposed to property sector. So we can't say that this is in Australia, let's roll back to New Zealand, because we have to look at both economies are different, and both way we operate in both countries are different. And if we simply take what they are doing and implement it here, is going to be very difficult, because we may not be able to handle that tax as such. That's the recommendation of some of the scholars at Tax Working Group. That's what they have mentioned. But also government also need to fund their social programs. They have a pressure to widen their tax base, and wealth tax is one potential solution. That's again some scholars have mentioned. So there is to and for from the both sides, as government need money, and there is one way to bring the money to the government. But then it comes back to, you want to collect more money or you want to be fair tax system. That's the design of the tax system they need to think about. Conclusion: New Zealand and Australia, they are different countries altogether, different economy, different approaches. New Zealand may introduce similar system in future or may not, in different form or shape. That's the government to decide. But whatever they do, a careful consideration is required, because economic impact would be significant. So economy should be able to handle it, whatever they try to put in together. So that's all about me. I hope I have explained today about land tax in New Zealand and likely implementation, how this will look like if that's been implemented. And there will be a link in the description which explains that in detail article as well, what I have written. And please like this video and subscribe to our channel. Keep watching, keep growing your financial portfolio. Thank you for watching this.